Hello, welcome to News of China. Today is Saturday, October 14. I'm your host Lu Yang. Here's today's news. China's stock market regulators are cracking down on the appropriation of funds of listed companies by controlling shareholders, saying those who fail to repay by the year-end face prosecution. The China Securities Regulatory Commission made the decision at a meeting in Changsha, capital of the central Hunan province, after Premier Wen Jiabao personally intervened in the matter. China Securities Regulatory Commission Deputy Chairman Shang Fuli said at the meeting that local regulators should preserve evidence gathered in investigations for possible prosecutions. China reported its highest ever monthly volume of crude oil imports in September, with more than 13.46 million metric tons crossing into its territory as recorded imports, an increase of 2.4% over the previous monthly record set in January. According to a report in the Asian Wall Street Journal, the net import figure amounts to a daily average of 3.29 million barrels of crude and underscores challenges the nation faces in balancing rapid economic growth with energy conservation and a growing dependence upon foreign sources for its energy needs. September's crude oil imports were 24% greater than those for the corresponding period a year ago. The report said most of the volume surge is believed to be linked to higher rates of domestic consumption as China grapples with rapid economic growth. Jiangxi Copper Company will invest in a $215 million copper mining project in Canada as the country's top copper maker secures raw materials to expand production. Its 49% owned unit, Global International Jiangxi Copper Mining Company, has agreed to invest $105 million for a 75% stake in a joint venture with Vancouver-based miner BC Metals Corporation, which will hold the balance. BC Metals, which owns the mine, said on its website this week that the venture will develop a mine with an annual capacity of 50,000 tons of copper ore at Red Chris, British Columbia. The Chinese government encourages its companies to participate in overseas mining projects for copper and zinc to meet rising domestic demand. China National Offshore Oil Company Limited announced on Thursday that a new oil project in North China's Bohai Sea has successfully come on stream. The project QK17-2E, including one wellhead platform and 6 wells, is now capable of producing more than 2,400 barrels of oil per day. The project is located in western Bohai Sea. The average water depth there ranges from 5 to 7 meters. China National Offshore Oil Company Limited holds 100% interest of the QK17-2E project. As the third largest oil producer of China, the company produced 81.7 million barrel oil equivalent in the first half, up 7.4% from the same period of last year. China Eastern Airlines Corporation, the nation's third largest carrier, appointed Cao Jianxiong as president of the company, replacing Luo Chaogeng. Shanghai-based China Eastern said in a statement to the Hong Kong Stock Exchange that Cao Jianxiong took up the job yesterday. Wan Mingwu also ceased to be the airline's vice president. China Eastern has changed its president every 2 years for at least the last 6 years. Cao Jianxiong, an executive director at China Eastern, has been vice president of the airline's parent company since October 2002. IBM is moving its global procurement division to Shenzhen, China. This is a significant event because it's the first time IBM has relocated division of corporate headquarters overseas. Shenzhen, where IBM already has its main purchasing office and most of its regional procurement staff, is just north of Hong Kong and has elevated its global status as a supply chain capital and is increasingly moving up the value chain. IBM hardly resembles the hardware manufacturer of its past and now focuses mostly on software and services. And Asia already accounts for a third of the $40 billion it spends annually on procurement among its 3,000 suppliers in the region. In conjunction with its expansion in India, IBM is seeking out low-cost suppliers in Asia to boost the value added. China Telecommunications Corporation, parent of China Telecom Corporation Limited, plans to list its telecommunications engineering and technical service unit on the Hong Kong bourse, the South China Morning Post reported on Friday. The newspaper said China Telecommunications Corporation had filed an application with the stock exchange for a November H-share listing to raise about 2 billion Hong Kong dollars, which is $256.4 million US dollars. It gave no other listing details. Shares in China Telecom were up 1.4% at 2.90 Hong Kong dollars by the lunch recess on Friday, outperforming a 1.02% rise in the city's benchmark Hang Seng Index. China Telecom shares have gained almost 4% since Tuesday's close, compared with the 1.3% rise for the index in the same period. Those are news today. Thanks for watching. See you next time.